All right, guys, today we got a good one. Today we're going to be talking about the top 15 financial blunders. And I got my co-host today, THB in the building. What's up, man?
Hey, everyone. Good to be back.
Guys, so this is a rare event. We're going to be talking about some funny stuff. So remember, we are live. So any questions, comments, concerns, let us know. We'll dive into it. Maybe you want us to cover a topic, but this is going to be a very funny, good, entertaining one for you guys. So we're going to talk about how to...
We are going to be rich.
Absolutely.
And all the sad stories, you know? How so many people lost money. How you were to lose money. How we lost money. Nah, guys, we're going to talk about the good stuff. So remember, guys, like, share, and subscribe. And after this video, we're going to jump onto THB's channel to finish up the list. So let's dive right into it, guys. Actually, let me find my mouse real quick. So many screens. All right, let's run it.
This is Sam Bankman-Fried. People call him SBF. He's the founder of FTX. He also controlled a crypto hedge fund called Alameda Research, but that's all gone now. He wants you to think he's a sweet guy. He even brought in a famous YouTuber who called him the most generous man in the world. Yep, that happened. Truth is, Sam Bankman-Fried is a liar and a crook. His personal crypto FTX token was basically a Ponzi scheme hidden below layers of Moonbro jargon. He even went on Bloomberg's podcast and bragged about.
We got a comment saying we're both pro traders. I'm not considered a pro trader, but I do trade my own funds. He trades his funds. But we're not here to sell you on trades. We're here to explain to you guys and share financial blunders. And our first one, guys, to give you a little intro. A little intro is the FTX massacre. I mean, we talk about billions of dollars. Regulators got screwed into it. We got politicians got roped into it. So it was horrible. Oh my!
Yep. A lot of money laundering going on with that one.
Oh no! Oh no!
About it. Yep, that happened. He used his Ponzi token as collateral to borrow billions of real dollars that he couldn't pay back. He then used those real dollars to build an empire out of dying companies like Voyager and BlockFi. This led Jim Cramer to call him the new JP Morgan. That's weird. It's not like Jim Cramer to promote a billionaire.
You know about inverse? Pause this for a second. I hope everybody knows about inverse Jim Cramer, right? Once Jim Cramer says something, the opposite happens. So when he called him the next JP Morgan, pretty soon after it went bust, right?
Surprise, motherfucker.
Yeah, every time Jim Cramer said something, it's always like...
Yeah, inverse Cramer.
All right.
People cryptos like Bitcoin, or so they thought. What they really bought from SBF was an IOU. But as long as everyone didn't cash in their IOU at the same time, the scheme worked. Until it didn't. This other a-hole who hates SBF came along.
Other hell. We got so much.
Scamming everybody now.
And engineered a bank run with some passive-aggressive tweets. It worked. SBF didn't have enough money to repay everyone at once, and now his customers have lost everything. He'll be happy to know that this is exactly how every bank in the world operates. So where did all the money go? He misappropriated $4 billion trying to save his failing hedge fund. Whoops, that's a felony. He spent $21 million on Super Bowl commercials, $5 million for the big guy, $40 million in
for the big guy.
campaign donations. I wonder what he wanted in return. And everyone who's pointing at this story and saying,
this is exactly why we need to regulate crypto.
Remember that SBF stole billions. That's already a crime. And he spent a lot of it on bribing politicians. Also a crime in order to create a crypto monopoly for himself. Government regulations don't protect the customers. They protect the crooks. That's exactly what SBF was trying to do.
See,
Woo,
I thought by him donating to the politicians, he was actually going to possibly get off because I thought he was donating to the right people.
Yeah.
Yeah.
But he definitely got in the face on that. No way. So we got our next one, guys. Our next financial blunder. This is Lehman Brothers explained in 2 minutes. A little bit boring, but we're gonna speed it up. Remember, guys, questions, comments, let us know.
2008, Lehman Brothers filed for bankruptcy. At the time, the company was the fourth largest investment bank in the United States. With $639 billion in assets and $619 billion in debt, this was hands down the largest bankruptcy in U.S. history, easily eclipsing both WorldCom and Enron's filings earlier in the decade. While it was the subprime mortgage-induced financial collapse of 2008 that led to Lehman Brothers going belly up, the bankruptcy examiner's report that came out 18 months after the fact revealed Lehman was cooking the books in years prior to the recession.
And guys, those cooking the books is exactly how FTX and how a lot of these big companies get away with it. They cook the books, kind of like the last stream I just did a little bit ago. How someone lost $600,000 because they invested into X person or X company, and guess what ended up happening? They cooked the books, and guess what?
Scamming everybody now.
And allegedly speaking,
Allegedly, that's ignorant.
we're gonna be
We
rich.
are gonna be rich.
We know that's not right, guys.
I would recommend to the audience, if they want to get a good like synopsis of this whole situation, watch the movie Margin Call. It's pretty much nails it. And it's interesting too because, as we know, most of the Treasury secretaries tend to come from Goldman Sachs, who was a competitor of Lehman Brothers, and they let them go belly up, but they rescued everybody else. Remember the whole bailouts and all that? They
Yeah.
rescued basically the rest of the industry, but they let Lehman Brothers fail.
And then scoop all that stuff. I remember we're about to get into the next financial crisis right after that, the 2008 financial crisis. And if you guys did not know, actually, what is it? Wachovia was selling houses for like $1. So it's kind of interesting. Like
Damn, I missed my window.
Yeah, they went belly up. They flipped the houses that they had on their balance sheet to their own banks that had interest in it. It was kind of like a
Wachovia got bought up by Wells Fargo. I remember.
And mistakenly, like I told them, like this is all done, accidentally, guys. Right? This is like,
Gotcha, bitch.
Yeah, it's a
let's see,
accident, right?
Accident. But we'll play a little bit of this clip, guys, about the 2008 financial crisis for the people who do not know.
We are often quick to forget the tragedies of the past, yet valuable lessons are to be had by exploring their causes and effects. After all, in a world of ever-changing rules, products, and services, history is the...
There you go.
That's right, mortgages, the loan you take out when you want to buy a home. After all, for mortgage lenders, these loans are a lot like bonds with bonuses. You receive regular interest payments, and if the borrower defaults, you get possession of their house, which is a handy fallback because with real estate prices on the rise, recovering your losses is no problem. But investors don't want to buy the individual mortgages of Kate, Sue, and Bill down the road. No, my friend, that's where investment banks come in. These institutions, with their large capital and industry expertise...
Man, this is a really good video. I like edited stuff like this. What about you?
Oh, absolutely.
Gosh, hey, audience, you guys think this is a good video, like editing stuff like this? I would actually enjoy stuff like, because explaining complex topics like this.
Decide to buy up mountains of mortgages from lenders, pool them together, and then sell shares of the pool to investors as mortgage-backed securities, meaning that home buyers now pay investors their mortgage payments. Ain't that nifty? Investors sure think so, and soon enough, people are flocking to investment banks to buy up their securities. And it's not just banks doing this. The government, in an attempt to boost mortgage lending, is using the Fannie Mae and Freddie Mac, two sponsored corporations, to do the same thing. Soon enough, lenders are facing a seemingly endless demand for their mortgages, which they're more than happy to part with. Because every time they sell the rights to their interest payments, they get their money back, which they can loan out again. So mortgage lending and home buying kick into hyperdrive, and investors are getting pretty rich in the process. But other companies, seeing the gravy train running full speed in the investment space, are feeling left out, and insurers, wanting to cash in too, begin to sell.
What's up, Alexander? Thanks for guys for making it to the stream. I know we're streaming late, but we got a funny topic today. But this is the financial crisis, guys, basically in a synopsis. People scamming each other and
Scamming everybody now.
we get a whole bunch of crap. Were you investing during this time?
No, I was too young. I wish that, so the recovery that happened right after, I wish I had money like 2009, 2010, because that was the time, that was the bottom of the market, especially not just the stock market, but the housing market too. That would have been the best time to buy.
Give me a second. We got a comment about that. Yeah, actually, hey guys, if you guys want me to expose anybody, let me know in the Discord. We'll see that in the stream, but this is a different type of stream, guys. So we got our next thing. We got Bernie Madoff, dead in prison at 82. This Ponzi scheme was like,
So he came to light also in the 2008 financial crisis. He was part of that. So this is a good segue because he was part of that.
Especially, how do you get? I always wonder, like when I started thinking about like how do you get your money tied up to it. Like I wasn't part of a scam, but I didn't lose like a big significant amount of my money. But for him, he collapsed celebrities. Like it was horrible for a lot of these rich individuals. But Let's get into
For
it.
more than 50 years, he was famous only on Wall Street, a big money manager, founder of his own firm at age 22.
The basic concept of Wall Street, which sometimes the regulators lose sight of, and as do the academics, is it's a for-profit enterprise.
He became chairman of the NASDAQ, an authority on regulation.
No one's going to run a benefit for Wall Street. So whenever I go down to Washington and meet with the SEC and complain to them that the industry is either overregulated or the burdens are too great, they all start to roll their eyes.
But in December 2008,
if you work on a trading desk, stop what you're doing for 1 second.
Bernard Madoff
Stop trading? No way.
became a household name.
The FBI arrested him this morning after he told senior employees yesterday that his business was a giant Ponzi scheme.
Tonight, as much as $50 billion is gone, vanished.
God. Oh my gosh. I guarantee people when they woke up, they're like, oh no, I was up so much, but it's just gone.
From Madoff clients around the world, including celebrities like Steven Spielberg, Kevin Bacon, and Elie Wiesel, and regular investors like Betty Greenfield, who lost everything.
I kept saying, this can't be. This just is not happening.
I remember that.
Madoff confessed he hadn't made a single trade in years. Critics like investigator Harry Markopolos earned the ultimate "I told you so."
I gift wrapped and delivered the largest Ponzi scheme in history to them, and somehow they couldn't be bothered to conduct a thorough and proper investigation.
The stain of the Madoff scandal forced a total makeover at the SEC.
We got a comment from Tom. Oh, go ahead.
Oh, go ahead.
We got a comment from Tom. 50 million is like missing a nuke missile. My gosh, 50 billion. Yeah, billions, man.
So a couple interesting things about that. So the government actually auctioned off his whole estate, and they recouped most of the money. That's the little known fact, but they recouped most of the money. It affected a lot of famous people, like as it mentioned in the clip. There was a ton of famous people implicated. I still find it interesting to this day that during an economic downturn, most of these people that were invested in him, they didn't ask, how are we getting positive returns? Like at some point, it's just too good to be true. And the fact that he didn't make a trade at all. And you should watch the movie. There's an HBO movie. It's called The Wizard of Lies, and it's about him. And there's a scene in that movie where the investigators came in and they asked him for like the DTC number, which they could have had him dead to rights right there, but he just literally made up a number and they just went with it. He was like that close to being caught, and he just made up a number and they went with it. And people need to understand too, they respected him because he basically created the NASDAQ. He was like the founder of the NASDAQ. So when the regulators came in, he's like, don't you know who you're talking to? He's like, I wrote all your rules. So a lot of really interesting things with that. But I still find it strange that, and that guy that was talking in the clip, he said, he showed like a statistical chart and he's like, these returns are statistically impossible, but no one listened to him. Yeah.
It's like when we're exposing people on the channel and they're saying like, hey guys, I turned $1,000 into $1 million in 30
it's statistically
days.
Impossible.
Like,
right.
If it's a meme token, maybe.
Mm-hmm.
But we're talking about like big markets, S&P 500, the NASDAQ. Like, you're not flipping your money exponential in a short amount of time. But woo.
Mm-hmm.
Let's move on to for the older people. Now, I think I was in middle school when this happened. But
the dot-com boom?
Yeah, let's see. I think I was in middle school. Yeah. So
when did it crash? Like 01?
Yeah.
2001?
The ramp up. So this video file says like 97 to 01. So
yeah.
4-year period. So minus 4 years. I was in high school, graduated. Yeah. I was in middle school.
So if you look at like the historical returns of the NASDAQ, so from like 95 to 2000, the NASDAQ was up like on average 30% each of those years. I should just pull it up. One of the years, I think 1999, it was up like 80%. And then it had a huge crash after. But for 5 years, it had 5 years of absolutely solid performance, unprecedented.
We got to get those type of games. Actually,
The dot-com bubble started around 1997, peaked in 2000, and ultimately burst by 2002. As the name suggests, the bubble revolved around speculative investments in internet companies. Simply put, investors were so excited about the progress of the internet that they invested in pretty much any tech company with a pulse.
kind of like the AI and crypto bubble, how we just threw money at the problem, right?
Yeah, it's going to happen again. The funny thing, a lot of the companies that are popular now came out of the dot-com boom, like Amazon for one.
Yep.
And there are several that may not have been established back then that ended up succeeding. I think even like Priceline, Hotels.com, like a lot of those companies, like and those sites and all that, those all actually started during that whole dot-com boom.
Oh,
He's saying Uber.
Yeah, Uber.
I think that it was just like ahead of its time. It just wasn't quite. They weren't quite there yet.
Let me see. Uber. I wish I got into Uber early. I would love to have gotten into like the ground feet of Amazon and Uber.
Did you see, by the way? I don't know if you saw this. You know, Enron is making a comeback. There's a new
What?
company. They like rebranded. Somebody reincorporated Enron. It's the same logo and everything. I just saw it the other day.
I think it's one of those stocks I'm just gonna watch. Oh man.
They stopped caring about whether or not a company was profitable, or at least could eventually become profitable. Common sense became a rarity.
Oh, we got a question. Where did I get those glasses? Basically like the dollar store guys. Like here, you guys want to check them out? But they fit the thumbnail, so I try to stick with the same glasses.
These, on the other hand, these are solid gold. They're really expensive. See the gold?
Look at that.
Yeah.
Oh, changing. Look, next time we do another collab, because we're doing your channel next, right?
Yeah.
I'll change my glasses to the next pair of glasses. You guys, I haven't shown in a while, but
Yeah.
let's see. It's our last clip, guys.
From 1997 to March 2000, prices went up about 5 times, only to go down 5 times and return to their pre-boom levels from 2000 to 2002. A drop which was also exacerbated by the terrorist attacks of September 11, 2001. Only 1 out of 2 internet companies survived, with businesses
Amazon.
such as Pets.com going from a market capitalization of over $300 million to zero within just 268 days.
268 days.
There are, however, also success stories such as Amazon, which went from around $100 during the bubble peak all the way down to $7 after it burst, but then climbed back up to over $600 per share.
Even higher, actually.
Yeah.
Like any other mania, the dot-com bubble is a fascinating human nature lesson.
Yeah. Greed. I mean, we're talking about, like, we see crypto today doing outrageous numbers. Crypto AI companies, I think it's very similar. These are internet-based or blockchain-based companies. So we'll see how it ends. Maybe we'll have another burst. But yeah, guys, we covered the FTX collapse, Lehman Brothers, 2008 financial, Bernie Madoff, and the dot-com bubble burst. Thank you guys so much.
Thank you very much.
And for people making the stream,
Welcome.
welcome, guys. Me and THP are going to switch to his channel to do the rest of the top 15 blunders, financial blunders. So if you guys have any question or comment, let me know. Subscribe to my channel. Subscribe to his channel. Check it out, guys. And we'll end the stream, and I'll see you guys on the next channel. So the link will be in the Discord or Telegram, and I'll see you guys there.
All right, we'll see you there, everyone. Bye. Be there or be square.
Let me see.